Hello and welcome to Buy, Hold, Sell, brought to you by Livewire Markets. My name's James Marlay and I'm going hunting for value in global markets. And two investors that are going to help me find the best value out there in the global markets. Got Jacob Mitchell from Antipodes and Andrew Clifford from Platinum. Gentlemen, welcome to the show.
Thank you.
Good to be here.
All right, let's talk big to start off with. Microsoft on the NASDAQ, $2 trillion market cap. Jacob, buy, hold or a sell?
Buy. If you think about what Microsoft is, it's the world's best software company and it's on an average software multiple. The two aspects of the business that we think underwrite the growth outlook, the adoption in the Azure business, which we think is only probably 25% through the adoption curve, and the ongoing, let's call it conversion of users to Office 365, which is a very competitive bundle. And it really is a stock made for this current environment. Loads of pricing power and in a slowing economic environment.
Andrew, sounds like a good pitch from Jacob. Is a buy, hold or a sell on Microsoft?
Absolutely a sell, James, and I can't disagree with anything that Jacob said. This is one of the finest companies the world has known. It is a great story and I can't think of anything that is wrong with it. And to me, that just makes for a risky investment, and we've seen this. A year ago, we could have talked glowingly about all the other FANGs, and one by one, they're dropping. I don't expect this one to, but if they disappoint at any time, we know what we're going to get hit with, which is a bit of a readjustment. So, not for us.
Okay, let's go out of tech into gas. EQT Corporation, $14 billion market cap, makes it a minnow over in the US. Buy, hold or a sell?
Yeah, look, energy markets have been great, and everything that's happened in Russia makes that outlook even better. So we're going to have tight energy markets, whether it's gas or others, for some time to come, and that's going to underwrite earnings here for a while. But longer term, it's not that clear to me, where we go here. They've had a good run. They're okay. It's a hold.
Okay. It's nearly doubled over the past 12 months, Jacob. EQT, buy, hold or a sell?
Yeah, look, we still see it as a buy. It's in our top 10. It's a company which we bought prior to the Ukraine crisis. We're very constructive on the outlook for natural gas as a, let's call it, transition fuel. It has half the emissions intensity of coal. We're still going to have lots of demand for energy, and the US is just in a very unique position of supplying it at a very cheap price.
Next stock, Microchip Technology, listed on the NASDAQ, $36 billion market cap. Buy, hold or a sell?
We're a seller generally of semiconductor stocks, which are very reliant on the foundries, which Microchip is. In terms of the semiconductor value chain, we think TSMC and the capital equipment providers take most of the profit pool over time. Investors have forgotten, I think, how economically sensitive semiconductor demand is. And also, semiconductors are very much exposed to this pull forward of consumer spending that's happened across the Western world. And also we have China that's slowed aggressively. So we just think the demand environment is much worse than many investors are currently sort of discounting.
Okay. Andrew, can you give us the quick pitch on what it does? I did try to work it out from the website.
So Microchip makes microcontroller units, which are a semiconductor. It's like a very simple mini computer. And so if you think about every electronic product you can touch, your microwave, the thing that controls that when you put in the time, press the start button, that's an MCU. Same for your car, turn the window up or down, a robot, everything. It's about the electrification of our world. Everywhere you look, there are microcontroller units.
Okay.
And
microcomputers don't sound very simple to me, but that was a good explanation. Now, the stock, buy, hold or a sell?
So it's a buy, and so this is very different to its semiconductor brethren. This is a company that it makes 20,000 odd off-the-shelf products. Its customers are tied in because they get used to working with those. Once it's in a design, you're not going to change it out. It's an incredible spread of end markets. So one of their big end markets, autos, are in short supply, and that's because we can't make enough MCUs, which really, they are not particularly reliant on the foundry system. So we have, yes, there's a bit of cyclicality in this business, but this thing has been, organically grows high single digits. You're buying it on around 12, 13 times. Yeah, there's a little bit of variability there, but not significant. And historically been a big M&A story. That's coming to an end. So the cash is just going to like flow out of this thing like you won't believe.
Sounds like a party. Andrew, the title of this show is Undervalued Global Growth Stocks. So I've asked you to bring along a recent portfolio edition or something that you think meets that headline, Undervalued Global Growth.
Yeah, look, sorry, I'm going to go with one I've been in a little while, but it's had a good pullback, and it's a very similar story to Microchip, which is Mini Bear in Japan. Their first market, globally dominant in making miniature ball bearings, but they've turned their expertise in manufacturing highly automated or very small components into really a large offering of componentry for all sorts of things. It's just a very nice growth industrial, and the thing about it is that the big story here is M&A in Japan. No one's really doing it well. These guys are M&A champions. We think this is a sort of a 10% grower again on a low teens multiple.
Okay, Mina Bayer. Jacob, same question to you. Have you got a stock that meets the headline of undervalued global growth that you can pitch to our viewers today?
One of our largest holdings is Merck, and investors haven't associated large cap pharma with growth for quite some time. Now, you've always got to think about the growth relative to the multiple. So you pay a P of 12 times for Merck. And look, we think it's one of the few pharma stocks that actually still has a functioning internal R&D engine. So less reliance on large acquisitions to manage pipeline risk. A third of the business is animal health and vaccines, which is quite a, standalone would be on a very high multiple. And pure play animal health exposures trade on 30 times PEs. The vaccine businesses have a lot of pricing power. It's a relatively simple, high margin business with clearly a lot of repeat purchases. We think that offsets the risk that is in Keytruda, which is their large oncology drug. Let's face it, you don't have to grow that fast when you're on 12 times, but we think it can grow in, let's call it, low double-digit type levels at the EPS level.
Well, investors love growth. There's also a account that love value. Our two guests have given you a bit of both today. I hope you enjoyed that episode of Buy, Hold, Sell as much as I did. And remember to check in regularly. We've got new content coming to you every week.